Ever dream of striking it rich? It's a tantalizing thought, isn't it? The idea that with just one smart move, you could change your life forever. Want to turn a small investment into a life-changing sum? Imagine putting in just a little bit of money and watching it grow exponentially. It's a common aspiration, and while there are no guaranteed shortcuts, understanding asymmetric risks can put you on the fast track to financial freedom. These are the kinds of opportunities that can transform your financial landscape. Buckle up, because we're about to dive into the exciting world of high-reward investments. This is where the thrill of the financial markets meets the potential for extraordinary gains. Asymmetric risks are like hidden gems in the investment world. They are often overlooked but can be incredibly valuable if you know where to find them. They offer the potential for massive returns compared to the relatively small amount you risk. It's about finding those opportunities where the upside far outweighs the downside. Imagine a scenario where you could potentially double, triple, or even tenfold your initial investment. These are not just dreams. They are possibilities with the right strategy. That's the power of asymmetric risks. They can turn the ordinary into the extraordinary, the mundane into the magnificent. So, are you ready to explore these opportunities and take your first step on the fast track to fortune? So, what exactly are asymmetric risks? Let's dive deeper into this fascinating concept. In simple terms, it's like placing a bet where the potential upside far outweighs the downside. Imagine walking into a casino and placing a bet where you could win 10 times your initial stake. Think of it like this. You risk a small amount of money, say $1,000, but have the chance to gain $10,000 or even more. This is the essence of an asymmetric risk. That's what we call an asymmetric payoff. The potential reward is significantly higher than the risk you take. These opportunities exist because the potential outcomes are not equal. One door might lead to a modest loss, while the other could open up to a substantial gain. You might lose your initial investment, yes, but the possibility of a huge win makes it a gamble worth considering. It's about weighing the potential for a big win against the risk of a small loss. History is filled with examples of asymmetric risks paying off. Think of early investors in tech giants like Apple or Amazon. They took a risk, but the rewards were astronomical. But remember, it's not just about blind luck. Successful investors don't just throw money at any opportunity. They educate themselves, study market trends, and understand the underlying factors that could lead to a big payoff. Smart investors use knowledge and strategy to identify and capitalize on these asymmetric opportunities. They look for situations where the potential upside is much greater than the downside. Consulting with experts and doing thorough research can help in identifying these golden opportunities. It's about making calculated decisions, not just taking wild risks. The more informed you are, the better your chances of finding that big win. So the next time you come across an investment opportunity, think about the asymmetric risks. It might just be your ticket to big wins. Let's look at some real-world examples. Remember Amazon back in the early 2000s? Investing in a then-small online bookstore seemed risky, but those who believed in its potential and rode the wave of e-commerce witnessed their investments skyrocket. That's asymmetric risk in action. Or consider Bitcoin. Early adopters who recognized its potential as a decentralized digital currency and invested when it was just a few dollars per coin are now reaping the rewards. These are just two examples of how understanding and leveraging asymmetric risks can lead to extraordinary returns. The beauty of asymmetric risks lies in the payoff structure. You're not aiming for small, consistent wins. Instead, you're looking for those rare but significant victories that can transform your financial landscape. Think of it like a baseball player aiming for home runs rather than just base hits. This approach embraces the possibility of some losses along the way. Not every investment will be a home run, but by carefully selecting opportunities with high upside potential, even a few big wins can more than compensate for any minor setbacks. Section 5. Tech startups, high risk, higher rewards. Tech startups are a classic example of high-risk, high-reward ventures. Investing in a fledgling tech company is like betting on a horse in a race. Most won't make it to the finish line, but the few that do can bring in a fortune. Think of companies like Uber, Airbnb, or Tesla. Early investors who saw their potential and took the risk are now reaping the benefits. These companies disrupted industries and generated massive returns for those who dared to believe. Section 6. digital domination, limitless potential, limitless profits. The digital age has opened up a world of asymmetric opportunities. Digital products like software, online courses, or even digital art have virtually zero marginal cost of reproduction. This means once created, they can be sold an unlimited number of times, generating significant profits. This scalability is a key characteristic of asymmetric opportunities. Unlike traditional businesses with physical limitations, digital ventures can grow exponentially, turning a small initial investment into a goldmine. Section 7. Beyond the usual unconventional asymmetric bets. Asymmetric risks are not limited to the stock market or tech startups. They exist in various aspects of life. Consider moving to a big city. It's a risk, sure, but it also opens up a world of opportunities for career advancement and higher earning potential. Even investing in cryptocurrencies, while volatile, can be seen as an asymmetric bet. The potential for massive returns exists alongside the risk of significant losses. The key is to approach these opportunities strategically, understanding the risks involved. Section 8. Safety net and smart moves, balancing risk and reward. Before you go all in on high-risk ventures, remember that responsible investing involves balance. It's crucial to have a safety net, like an emergency fund and a diversified investment portfolio. Don't put all your eggs in one basket, especially when dealing with high-risk assets. Diversification helps mitigate losses and ensures that even if one investment doesn't pan out, your overall financial well-being is not compromised. Section 9. Knowledge is power. Understanding due diligence. Remember, asymmetric risks, while potentially lucrative, require careful consideration. Don't just jump into something blindly because it sounds promising. Do your research, understand the market, and assess the potential downsides. This process is called due diligence, and it's your best friend when navigating the world of investments. The more you know, the better equipped you are to make informed decisions and identify opportunities that align with your risk tolerance and financial goals. Section 10. Think big, start small. Taking the first steps. You don't need to be a millionaire to start leveraging asymmetric risks. Begin by investing small amounts that you're comfortable losing. As you gain experience and confidence, you can gradually increase your exposure. Remember, Rome wasn't built in a day, and neither is a fortune. It's about taking calculated risks, learning from your experiences, and gradually building your wealth over time. Section 11. Your journey to wealth. Embracing asymmetric opportunities. The world of investing offers a plethora of opportunities, and understanding asymmetric risks can be your secret weapon to unlocking significant wealth. Asymmetric opportunities are those where the potential upside far outweighs the downside. This means that even a small investment can yield substantial returns if the conditions are right. By carefully evaluating potential risks and rewards, diversifying your portfolio, and staying informed, you can position yourself for financial success. Diversification is key. It spreads your risk across different assets, reducing the impact of any single investment's poor performance. Staying informed means continuously educating yourself about market trends, economic indicators, and emerging opportunities. Remember, it's not about getting rich quick. It's about making smart decisions, being patient, and embracing the power of asymmetric risks to achieve your long-term financial goals. Patience is crucial in the world of investing. It allows you to ride out market volatility and benefit from the compounding growth of your investments over time. Long-term strategies often outperform short-term tactics, providing a more stable path to wealth. So go out there, explore the possibilities, and start building your path to financial freedom. Take the time to research and understand different investment vehicles, from stocks and bonds to real estate and alternative assets. Each has its own risk-reward profile and can play a role in your overall strategy. The journey to financial freedom is a marathon, not a sprint. Embrace the process, stay committed, and watch your wealth grow steadily over time.